All right, let's dive into an explainer that's going to take your absolute biggest tax fear and turn it into a clear, empowered action plan. Look, getting an income tax notice feels like a personal accusation, right? It's stressful, it's confusing, and honestly, it can completely ruin your day. But today, we're breaking down the tax department's playbook. We're shifting your mindset from absolute panic to complete control. Now, this is purely for educational purposes, but by the time we wrap up, you'll know exactly how to handle these situations like a pro. Imagine this scenario. You filed your returns perfectly on time. You paid your dues and you're completely relaxed. Then, months later, you check your email on a random Tuesday and boom, an income tax warning lands right in your inbox. Your heart drops immediately, doesn't it? You start second-guessing literally everything. Did I do something illegal? Are massive penalties coming my way? It's a universally terrifying moment for any taxpayer. That fear of the unknown just immediately takes over.
But here is the core truth of this entire explainer. Receiving a tax notice is completely manageable. I promise you, the notice itself cannot hurt you. It's really just a communication. But burying your head in the sand, now that is what actually creates a crisis. Ignoring the tax department turns a tiny, simple mismatch into a massive financial fire. Action is absolutely your best friend here. And avoidance? Well, that's your worst enemy.
So, to make sure you're fully prepared, here is today's playbook. 1. The real notice problem. 2. What actually triggers a notice. 3. High-value transactions. 4. Spotting fake tax notices. And 5. Your immediate action plan.
All right, starting off with Section 1, the real notice problem, and specifically, why getting one isn't the end of the world.
You know, the days of officers manually checking your paper files are long gone. Today, the tax department is basically this giant automated matching engine. The algorithm instantly cross-checks your return against your annual information statement, your AIS, your Form 26AS, and your bank records. Think about it like this. If your bank reports 100 rupees in interest, but you only declared 90, the computer automatically flags it. It's not a personal attack. It's literally just math doing its job. The system simply demands that your submitted numbers perfectly match their collected data. And because of that system, not every notice means you're in trouble. They actually serve logical, very specific purposes. For example, an intimation often just means your return is processed or, hey, your refund is ready to be credited. A defective return simply means you maybe missed attaching a document or checked the wrong box. Even a scrutiny or document request notice just means the tax officer needs a little bit more information to verify your claims. You just answer these requests with clear facts, not panic.
Moving on to Section 2, what triggers a notice, or as I like to call it, the tiny errors that cause big headaches.
It usually boils down to tiny, easily overlooked details. Unreported income is the absolute biggest trap, especially that small interest just sitting in your savings account or your fixed deposits. People so often forget that this is entirely taxable. Or maybe your TDS didn't perfectly match your claims. Sometimes, you might have just chosen the wrong ITR form entirely. The takeaway here, simply filing a return isn't enough anymore. Filing it with 100% accuracy is what actually keeps you safe from these automated triggers.
Let's jump into Section 3, high-value transactions. This is about when big moves attract attention.
You see, the system is specifically designed to spot large financial footprints. Buying or selling property, making heavy stock market investments, sending money abroad, or making huge cash deposits. These will immediately catch the algorithm's attention. Even sudden luxury spending or large unexplained gifts are going to trigger a routine check. The tax department simply gets an alert that a high-value move happened, and they just want to ensure the corresponding taxes were paid properly.
But listen, here is a very reassuring truth. Making a massive, completely legal property purchase does not make you a suspected tax evader. Not at all! The department just wants to connect the dots between your declared income and your heavy spending. They're just looking for consistency. So what's your only job here? Just provide the documents that connect those dots logically and clearly.
Now, this brings us to a crucial part, Section 4, spotting fake tax notices and protecting yourself from scams.
Sadly, scammers absolutely love to weaponize tax anxiety, so you really need to know the difference between a real alert and a trap. A genuine notice, it will always be verifiable on the official tax portal with a unique identification number. But a fake notice, it's designed to create sudden panic. Scammers are going to message you on WhatsApp, send shady SMS links, and demand your OTP, bank details, or even immediate payment. Let me be clear, the real income tax department will never, ever ask for your banking password on WhatsApp.
Which brings us to your golden rule of defense. If a scary email or text arrives out of nowhere, do not click the link. Just don't do it. Instead, open a new secure tab, go directly to the official income tax portal, log in, and check your dashboard. If the notice is not sitting right there on the official portal, it simply does not exist, period. Do not engage with it any further.
Finally, let's talk about Section 5, your immediate action plan. Here's exactly what to do right now if a real notice arrives.
All right, it's time to put on your financial detective hat. Step 1, identify the specific issue and seriously, note the strict deadline. Step 2, gather your evidence. Cross-check your return against your AIS, your Form 26AS, your Form 16, and your bank statements. Step 3, verify the mismatch line by line to see exactly where the numbers diverged. And finally, Step 4, submit your clarification and documents exclusively through the official portal. Never ever send sensitive financial documents via email replies to random addresses.
Now, pay attention here because this is the single biggest mistake you can make, assuming a notice is too small to matter. The system does not forget. A minor mismatch doesn't just magically disappear because you archive the email. What starts as a simple 5-minute online reply can quickly snowball into heavy tax demands, compounding interest, and NASA penalties if you just ignore it. When it comes to notices, time is always of the essence.
So your main takeaway from this explainer is actually pretty simple. Accuracy and speed are your absolute best weapons. Match every single figure before you file. And if a notice does happen to come your way, handle it calmly and instantly. So I leave you with this. The next time a sudden alert from the tax department hits your inbox, will you be a victim of panic or a master of the facts?